What is up, everyone? What is up, YouTube? I hope everyone is doing well. Today's video, as you can tell from the title, we have the CPI report finally today. The CPI report came out today at the highest inflation reading since, I think it was 1981, right? It's been 41 years, today's 2022. So in 41 years, this is the highest inflation reading we have seen. Now, the number came out 9.1% year over year for the June figure, based on an expectation of 8.8%. So that is a huge, huge, huge increase, right? We're nearing that 10% marker. Now, the thing with that is a lot of analysts, investors, everyone was hoping, not expecting, but hoping for a subdued inflation number where we actually start peaking and we start turning this thing lower. Now, that is not at all the case. We got this huge reading of 9.1%. That is a number that we traded in our live trading room today, and we were expecting, even yesterday, I was expecting bearishness yesterday. I was expecting bearishness today, especially off this number. People were talking about 9%, right? Some of these numbers can be leaked here and there, and we got a massive drop in the market, right? We got a spill of, we hit a peak, I think, of like 70 something on the futures, like 38, 70 something. We had this like huge little pop, and then this thing got destroyed about 100 points from that top. Now, what are going to be the reactions here? Now, a lot of eyes on the Federal Reserve based on this number, because one of the one of the main things that the Fed is doing right now is looking to subdue this inflation, which is going to be done by hiking rates, quantitative tightening, right? All that stuff. Now, realistically, inflation is one of the top priorities right now, right? We already know this. And this June number is way out of whack. We've already hiked 75 bips in June. Right now, the expectations are 79 on average basis point hike by the end of July. Now, that suggests that it's a range. We have to understand that these hikes are ranges. Right now, the expectation is a 50 to 75 base point hike, right? It's still a triple hike. That's the majority of it, right? Still 70% expecting a triple hike. Now there's actually 30% that are expecting a quadruple hike of 100 basis points, because the expectation is 80 bips, right? So you have to take the range of 75 to 80 to 100 bips, and that is where we lie. So the increased expectation of a 4 times hike has grown about, I think it was like 25% since yesterday, something like that. So drastically from the Federal Reserve. That is going to sustain more downside pressure. We are probably going to see summer lows fairly soon, right into the end of this month. There's a lot of puts that have been buying puts for the end of the month, 350 puts on the SPY. We've also seen the expected Fed's funds rate by the end of the year has increased slightly as well. So the expectations of continuous hikes are continuously plaguing this market. We have hikes to worry about, quantitative tightening. We have these high inflation numbers, and all this points to not a soft landing at this point. So the talks about recession are still, I'm just curious as to why there's still a thing, right? I feel like it's pretty much just written in stone at this point. So it's interesting because we do have strength in the labor market, right? That's not typically what a recessionary behavior looks like. Somewhat strength, right? We have somewhat strength. Once that starts toppling over and we start to see these numbers actually react as we're expecting, we could start talking more and more about that recessionary action. So the market reaction, what had happened today, right? We saw, I'm not really going to talk about too much other than this, because this is pretty much the main thing that we should be looking at today. So the market reaction today, we saw a very drastic drop. We saw a pop, we saw the drop. Now, the S&P futures, we have a very important key level that we have to take a look at. Now, I don't think this downside's over. I think there's still downside potential. We could start running to the downside into the end of the week still, right? We still have a few days to go. We have what day is it today? We have Thursday and Friday, sorry. And we could see a little more of that downside open up. Now, why is this? Because people were piling into puts yesterday, right, into the end of the month. We have these increased chances of a rate hike coming out. We broke through on a order flow perspective. We broke through a lot of key levels to get into this area. Once we broke that 38.40 on the futures, we came into a new distribution block that opens the downside into 37.95. Once 37.95 opens up to the downside, we have an area at 37.40 to 44, right? if this goes the 40 to 44 right now, I'm telling you guys, we are going to see a very easy drop through down into 3700 and 3693-ish area. We'll see a very, very quick move into that area. And then the lower distribution to the downside is around that 3690-ish area all the way down to the lows, right? A bit above that, like 3660. But to see 3600 break by the end of this month, I wouldn't necessarily be surprised the way that this is going. So again, all of these inflation numbers, and what this means is it's spelling more downside, right? We're not yet in an area where we've seen like aggressive fear in this market. The VIX is still fairly subdued. We haven't seen that large fear, and I don't know if we see that until even next year or maybe until the fall. So let's see how that shapes up. Those are the main areas that I'm watching on this S&P. We couldn't get peak inflation. We'll have maybe July to think about that, but realistically, it doesn't seem like peak inflation is around the corner. So we'll continuously watch these CPI numbers. We got the PPI numbers as well. We'll see if any softer landings come from there for the coming month, but we'll just keep an eye on a lot of these macroeconomic events and see how these Fed's funds rates shift around. So let's see. Yesterday we were fairly bearish throughout the day. Today, I'm still holding on the bearish sentiment, right? Especially if you break 37, 45, 44, 43, right? Low 40s. Let's call them low 40s. You break that area, there's going to be a lot more downside, right? We could get a very, very quick, like 40, 50 point drop through that area because there's not that much volume that's potentially stopping this move. So let's see what we get. What a day indeed, Lisa. Hope everyone is doing well, excited, and taking it slower today, right? Let's see how this market opens up. If you didn't trade pre-market, if you didn't make that money yet, and join us, community.tradeproacademy.com with our free community, and you can check us out on our website for free masterclass in futures and options. So let's see how our swings have done over the evening session. Now we'll see you guys. Let's open up these trading rooms and chat to you tomorrow.